Hey, good evening. Dan Fitzpatrick here at StockMarketMentor.com, and I want to look at Avalara here. But first, just a reminder, next Tuesday I'm teaching a VWAP masterclass along with Scott McGregor, who's my sidekick at Stock Market Mentor. Scott's a really great swing trader. I see him improving all the time. And between the two of us, we're going to teach you everything you need to know about volume weighted average price in two different ways. I use it a lot for day trading when I do our morning sessions, which, by the way, we're going to do another one of those tomorrow morning. Trade the open, first hour, looking to do some day trading and making some money tomorrow. That's for members only. But what I do is I look at VWAP and pivot points, but that's good for day trading, and frankly, that's about it. But there's a different VWAP that Scott uses for swing trading. It's totally different than mine. Same basic concept, but it's a totally different tool. And so I want you guys to be there for that. It's Tuesday night, and then we'll use that stuff on Thursday. We'll trade the open with that stuff too. So this is going to be a complete course here, basically, and it's a great opportunity for members. If you're not a member, just sign up for a free trial and you can get in on that too. But members, no, it's not an extra charge for you. It's all part of your membership. So anyway, into Avalara, and we'll look at this tomorrow morning when we're trading. So this was, these lines here I've had here for a while, and I drew them because they were kind of my hypothesis of what I thought the stock might be doing. So I started them on, I think it was the 5th, right around here or something. And my sense was, look, this is a stock that it sure is looking to me like it's kind of a little sloppy one, but a little bit of a cup, and then could be a handle, certainly one up there. And so I thought, okay, what if the stock just kind of trades sideways for a while? Is that a good thing or a bad thing? And I thought it could be a good thing because it would just kind of cause the price action to tighten up a little more and then give it more of a support on any kind of a breakout. Well, after hours today, the company reported earnings, and they actually posted an earnings loss, but that wasn't a surprise. But they beat on revenues. And so if you look at the way the stock's traded, it hasn't traded very much at all. This is not a super, it's not a super popular stock as far as trading. But the way the market has been going, I think this is a stock that bears watching, because while it's trading down a little bit, and if it continues to trade low tomorrow, stay away from it. I'm not saying buy the dip. I'm saying watch this thing and consider maybe buying the rip. In other words, if the stock starts trading up tomorrow, that could be your opportunity. It's like, okay, well, the earnings are out. Stock's been up for a long time, and traders like the numbers enough to still be buying the stock. So you're really buying the stock on a breakout, 93.60, I'll say, something like that. Now, I'm saying you're buying the stock on the breakout, not buying the stock in anticipation of a breakout. The breakout might not come, okay? So pay attention to that. We'll see how it trades tomorrow, and maybe we can make some money at the open. So anyway, that's all I got. I'll see you guys next time.